U.S. consumers are pulling back on spending in several areas, but food delivery remains relatively resilient part of household budgets. DoorDash, ticker DASH, Uber Technologies, ticker UBER, through its Uber Eats and Maple Bear, ticker CART, better known as Instacart, all posted strong sales growth in their latest quarterly results, showing consumers are still willing to pay for delivered restaurant meals and groceries. That was reported by Business Insider on Sunday. DoorDash CEO Tony Zhu has been surprised by customers' willingness to continue paying for delivery despite higher costs. DoorDash CFO Ravi Inukanda said the broader food category remains resilient because people eat regularly, noting that, quote, people eat 21 times a week, whether it's food or groceries, end quote. That was according to the report. Pretty astute synopsis by our friend here. Broader spending data points to a more cautious consumer. U.S. retail sales fell 0.6 in July, while Walmart posted its slowest quarterly comparable sales growth since 2020. Lower income consumers have also become more budget conscious as inflation continues to weigh on purchasing power. Consumer sentiment remained below pandemic era levels in August, while inflation exceeded wage growth for the fourth consecutive month. Real wages fell between December of 2020 and 2024 for nearly 40% of workers, while higher prices continue to leave some households with less money available at the end of the month. That can push consumers to prioritize necessities and value while cutting less essential purchases. Some diners are also moving away from McDonald's and towards rivals such as Burger King and Chili's, which have reported sales growth driven in part by value-focused meal deals. The delivery apps are also expanding by reaching new customers and adding new offerings. Uber's delivery gross bookings rose 26% during the second quarter, slightly outpacing growth in its ride-hailing business. Food delivery can be expensive, but convenience remains a powerful reason for consumers to keep using it. Business Insider spoke with customers who said delivery saves time, helps them manage household responsibilities, and can in most cases be worth the additional cost. For some households, grocery delivery can also be more practical than shopping in person. One consumer said delivery was cheaper than taking public transportation to a nearby store because local convenience store prices were higher even after delivery costs. DoorDash is also expanding beyond traditional restaurant delivery. The company has added more stores and grocery options, including regional grocers, the Kroger, ticker KR, and Kroger is purchases using SNAP benefits, giving consumers more reason to use its platform. The resilience of delivery comes despite continued pressure on food prices. A basic meal of a cheeseburger, fries, and a drink rose 3.2% in price over the past year, with only a handful of U.S. cities averaging below $15. Food affordability is also straining household finances. More than 1/4 of working-age adults who used credit cards for groceries could not pay their balances in full or missed minimum payments, while about 20% said they used long-term savings, including emergency funds, to pay for groceries. That creates an unusual consumer picture. Households are becoming more selective with spending, but food remains a necessity, and convenience can actually still command a premium. For delivery platforms, that could make food and grocery orders more resilient than other forms of discretionary spending, particularly as consumers look for ways to save time without cutting essential purchases entirely. Now, this brings up an interesting point to me, and I'm not sure which end of the spectrum I fall on. I'd like to get some ideas from the group here. Now, don't ever underestimate the laziness of the American eater. The American eater likes big meals, they like extravagant meals, and better still if you can deliver that meal to that consumer or eater. So I get that, but I also spent the last 3 weeks watching the Twitterverse, or the general social media universe, blow up over the, quote, burrito argument about how expensive a burrito is. I mean, I got news for you, folks. If the food is more expensive, perhaps one of the first things that you should do is actually go pick it up yourself instead of spending for delivery and then the subsequent tip. that belongs on top of that. Now, on the flip side, some folks are saying that actually I'm so busy throughout the course of my life that I've opted to go this route because it saves me time. And in the long run, with the entire calculus, it is actually worth it. Now, I kind of juxtapose that and I wonder, do these food delivery, if the economy, if oil continues to stay high, if the consumer, while resilient, starts to weaken at all, are some of these delivery companies at risk of having less delivery and as a result earning less and coming back in? Or does the consumer just opt to buy less things and still go for the convenient food delivery? This is an interesting one, and I could actually see this playing out both ways. I'd be very curious. Now, there's another, I didn't mention this, but this is a mention from the chat, and this is a good one. Duty is mentioning this is GLP disruption, smaller plates. So the part of this that I think you might be onto is like, I think back to just social gatherings. They could be family, but it could also be friends, could also be a work event. You would probably go to a restaurant, right? Sit down, order food, maybe even a couple of drinks, depending on who you're with. And I would completely agree, Duty, that the GLP-1 is probably shrinking that. If folks are still going out, perhaps they're ordering less. I know a bunch of folks that started taking GLPs that weren't even trying to stop drinking alcohol, that cut down alcohol, and in some cases stopped it completely. So I'm very curious to see how this plays out. As far as stocks go here, between Cart, Uber, and Dash, those are three stocks that rely on food delivery. And if we see any of those metrics come in, those are three potential short or put targets. However, if we see other areas of the economy weaken, yet we still have data showing that customers are opting to spend for convenience, then perhaps those could be almost safety trades in an area where the consumer is kind of tightening the belt. If we know that they're tightening the belt around other things, but not food delivery, makes sense, right? Makes sense. Derek here says, my sister gets food cheaper through delivery than actually going to the grocery store. I have not experienced that myself, but frankly, if that's the case, then that makes complete sense why customers are doing that. Smita said, good morning. Good morning to you, Smita. It's great to see you again. Everything is so expensive, especially daily use items. Your president and all the surrounding advertisers are useless. Okay. Okay, Smita. We'll see. I understand that the stuff's being more expensive, but we continue to get odd data points that say parts of the consumer are actually remaining resilient. And this one, again, this was surprising to me. The way I look at this, if I'm under price pressure and I need to start dialing things back, the very first thing that I am dialing back is going to be food delivery.